If the biggest risk you're taking is doing nothing with your money, if you're not investing, you're letting inflation, missed opportunities, and high taxes silently chip away at your financial future. In this video, we'll explore the real dangers of not investing and why it could cost you more than you think. 1. Inflation, the silent thief. Let's start with something that slowly eats away at your wealth without you even noticing. Every year, prices rise and your money buys less. Inflation has averaged about 2 to 3% a year, but that's just the normal cycle. Occasionally, inflation spikes due to politics, wars, or other unforeseen events. When this happens, prices rise, and rarely, if ever, do they come back down to previous levels. For example, if a war drives up the cost of oil, it's unlikely that those higher prices will ever return to their original levels. So if your money's sitting idle, it's losing value. But when you invest, you can outpace inflation and keep your money growing. 2. The danger of relying solely on a paycheck. Now let's talk about something many people overlook. Salaries might seem secure, but here's the reality. Salaries react to inflation, not precede it. If inflation goes up, your paycheck doesn't automatically follow. And the reality is that jobs depend on factors beyond your control, like politics, markets, technology, and even your boss. These factors can change rapidly, and your job could easily disappear. Plus, salaries are often taxed at over 50%, especially in higher tax brackets. That means you're left with a fraction of your income, and without investments, you're limiting your financial potential. And as you age, the risks increase. It becomes more difficult to find a job when you're nearing 50 because many companies favor younger employees or are less willing to invest in older workers. The longer you wait to invest, the more you're putting your financial future at risk. Retirement insecurity. Speaking of security, most people think that by saving a little each month, they'll have enough for retirement. But the reality is that often isn't the case. Without investing, your savings won't grow enough to support you when you retire. Many retirees struggle to maintain their lifestyle or worse, they run out of money. Starting to invest early means you can take advantage of compounding and build the wealth you'll need to live comfortably when you're no longer working. 4. Missed compounding opportunities. Compounding is when your money earns money, and that money earns even more money. It's like a snowball rolling downhill, getting bigger and bigger over time. For example, if you start investing at 25, you give your money more time to grow. But if you wait until 35, you've missed 10 crucial years of compounding. That's why it's so important to start early. Every year counts. Now, let's talk about taxes, because you don't want to be overpaying. Here's the kicker. Different types of income are taxed differently. Income from your salary is taxed the highest, sometimes at rates over 50%. But when you invest, you get tax advantages. For example, capital gains, the profit you make from selling investments, are typically taxed at a lower rate. Dividends, the money you earn from stocks, are also taxed more favorably than regular income. So, if you rely only on earned income, you could be paying much more in taxes than if you were earning money through investments. Start investing, and you'll have more control over your tax burden. So, there you have it. The risks of not investing are real. Inflation, job insecurity, missed compounding opportunities, and a higher tax burden can all hold you back from financial freedom. But the good news? You have the power to change it. And here's the best part. You don't need a lot of money to start investing. In fact, we've got another video showing you exactly how to get started with little money. Be sure to check it out, and don't forget to subscribe and hit the notification bell to stay updated on all things investing.